The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is the president of CoinFund, an investment firm. We've got Chris Perkins here with us live from the Bahamas at Crypto Bahamas. Hello there, Chris. Thanks for joining us.
Good morning, Christine. Thank you so much for having me.
So we do see that the crypto markets have been pulling back. Bitcoin is down below that psychological $40,000 level. What's your outlook on where this crypto market is going? It's very thin volumes in a narrow trading range.
Yeah, we think a lot of people right now are a little bit on the sidelines, but if you zoom out a little bit, there are some really good positive factors and tailwinds hitting the industry. For one, we're seeing that crypto markets have been pretty resilient amongst some other pain within the tech sector. And then if you step back even further, we're seeing some very strong trends from a policy perspective, where we're seeing the left and the right coming together and agreeing that, maybe we need to go on the offense a little bit and have really strong principles-based policy in the United States, which is very strong. The other thing that I'm seeing is, I talk to traditional institutional investment managers all the time. And when I left finance, they were all trying to get in, but now they're trying to get in even faster. I can't tell you how many of them are trying to launch new strategies, solely focused on digital assets, because they have demand for it. And I see when you step back and you look at some of the policies that are going to be coming together, particularly around and after midterms. I mean, again, I can't tell you how many candidates are running on a pro-crypto platform. That, coupled with, again, institutional adoption, I think is going to be a tailwind for the industry.
Well, on that note, so FTX CEO Sam Bankman-Fried had hosted a meeting with Dan Solomon, or the CEO of Goldman Sachs, and what was that all about?
So I think
David Solomon, sorry.
Yeah, David Solomon, right, or DJ Sol, as we also call him.
DJ
yeah.
Sol.
So the U.S. is primed for some real innovation in the derivative space, and I think they were really talking about some of the things that may be coming down the pipe pretty soon. If you look at the futures industry, the global financial crisis was caused by a lot of concentration and centralization, and the regulatory response to that was even more centralization and concentration, and they launched Dodd-Frank, and they really forced the use of intermediaries. Recently, FTX proposed a new model, and when the regulators came up with that model, they really didn't have a choice because they didn't have the technology to decentralize and to offer another alternative. But now we do, and what FTX has proposed is a different model where you can step back and people can access futures markets directly. That could have a profound effect on...
So that could eliminate intermediaries like
Right.
Goldman Sachs, so they must be shaking in their boots.
Well, I think there's a couple ways to think about it. Yes, Goldman Sachs, by the way, I used to run that business at Citigroup.
Okay.
And looking from, now the outside in, I think it also provides incredible opportunity for institutions to work with companies like FTX. And so I think there's this debate, this internal debate at many of the banks saying, is this good for the markets and bad for the markets? As I step back and I look at what this could do for the markets, I think it's going to be great. I think it could introduce competition, and it will really invigorate a derivatives market that really hasn't kept pace, particularly in crypto. A lot of the derivatives activity has gone overseas, and this could be a first step in really cultivating rich, deep derivatives markets for crypto, which are used to manage risk, right? And so I think at the end of the day, it will really be beneficial for the markets.
Or innovate or get left behind.
Yeah.
Also, you speak to a lot of regulators in New York, where you're based. So tell me a bit about what you're hearing, as well as the New York mining ban, which was the latest topic of conversation.
Yeah, this is kind of the gift that keeps giving, right? It keeps coming up on the proof of work debate. And it's a really important debate that I think needs to be had, where people say, is Bitcoin worth the use of energy? And I think we should look at that across all different industries. Is YouTube worth the use of energy that it uses? We use dryers, they use energy as well. And I think that's, it's a debate that needs to be had. At the same time, I'd prefer to see more of a principles-based approach where policymakers incentivize the use of renewables. And I'll tell you what we did at our firm was we were able to calculate our Bitcoin transactional activity. We looked at the geographical hash rate, and we were able to imply use of renewables, and we were able to come up with how much carbon we actually used for our Bitcoin transactions. Then we took it to a company called Nori. We worked with a farmer in Nebraska focused on regenerative agriculture, and we offset our carbon. And so I think the more that folks do things like that and show leadership in offsetting carbon, I think it's a net positive for the industry. But again, it should be principles-based rather than say, oh, this technology is good, this technology is bad. I would rather see policy, really emphasize and focus on use of renewables and offsets.
Just a step back with the derivatives business. How do you see this playing out in the financial world? Will traditional finance make that transition?
It's hard. And why is it hard? It's because legacy tech is very slow and cumbersome, right? And so it operates on these batches, slow batches, where a client will put on exposure. The clearinghouse would call the broker pays, and then later in the day, you get paid back. So it's very slow. Crypto markets don't work like that, 24/7, right? And so what you need is dynamic, real-time risk management, and that's what derivatives provide. And so I'm very encouraged that, regulators, again, you look at the Biden executive order, right? It's about reestablishing leadership in this space, particularly around digital assets, responsible innovation, and I think through appropriate disclaimers and education, why wouldn't we want to have dynamic derivatives markets in this country that allow people to hedge risk?